So you're looking for the quick route to understanding a really critical issue, aren't you? Something that's impacting people just about everywhere.
Definitely.
Today, that's the whole post-COVID cost of living and, well, the housing crises in major cities. We've sifted through a stack of information, looking at the U.S., Canada, and Australia,
Right.
to bring you not just the facts, but importantly, a look at where things might be a little less painful.
And what's fascinating, really from the outset, is seeing how similar the pressures are
Yeah.
across these, very different parts of the world.
Mm-hmm.
The pandemic really acted as a catalyst, didn't it? It sort of amplified existing trends in where people want to live and fundamentally shifted the dynamics of housing demand and supply.
Right.
We even saw this interesting donut effect,
Yeah.
initially.
Donut effect. That sounds intriguing. Unpack that a little for us.
Sure. So the donut effect refers to that initial period where, remote work really took hold.
Right. Everyone working from home.
Exactly. We saw many people leaving the really dense urban centers. And this caused rents in those core areas to, soften a bit.
Okay.
But at the same time, demand surged out in the suburbs and smaller metro areas. People wanted more space,
That's right.
which drove up prices there. So this initial shift, it had a ripple effect, not just on rent, but, local businesses, infrastructure, both in the cores and the suburbs.
That makes sense. Understanding that helps frame what came next.
Definitely. It's key to grasping the longer-term economic consequences we're seeing now.
Okay. So, with that in mind, let's dive into the United States. When we talk about housing affordability headaches, well, New York City and the San Francisco Bay Area are usually front and center.
Always.
Let's start in New York. It's just incredible to think that housing there eats up nearly 40% of the average household's budget.
40% just on housing.
And the average rent for a two-bedroom in 2024, over $3,000.
Over $3,000.
Mm-hmm.
It's no wonder it's ranked, among the most expensive cities globally.
And hitting residents hard. Over half are feeling a real financial squeeze.
New York City's situation really highlights a core issue, doesn't it? This massive disconnect between the cost of just living there
Yeah.
and what many people are actually earning.
Yeah.
When such a huge chunk of your income goes just to keeping a roof over your head, it cascades, affects everything else, what you can spend, saving, all of it.
And then you go across the country to the San Francisco Bay Area, and the numbers are, well, equally startling.
What?
Since the start of 2020, the average monthly payment for a mid-tier home, it's shot up by a massive 82%.
82%. It's staggering, reaching $5,900 in the first quarter of 2025.
Wow. And that's a combination of, skyrocketing home values and mortgage rates.
Exactly. Both factors pushing it up. And, it feels like this has been brewing for a while there.
It does.
Absolutely. What's sort of crucial here is the long history of underbuilding in the Bay Area.
Right.
There have been these chronic shortages of new housing for decades. Construction backlogs stretching all the way back to, 1968.
68.
Yeah.
That far back.
Yeah. So while we might have seen a bit more building activity maybe recently, it just hasn't been nearly enough to catch up with the demand.
So demand stays high.
And it keeps the vacancy rates, that's the percentage of available rentals that are empty, really low.
Which pushes rents up.
Exactly. It keeps pushing them higher.
It paints a pretty tough picture for anyone trying to, make a life in these major hubs. But we did promise we'd look at solutions, or at least alternatives.
Right.
Where in the U.S. might people find some relative affordability?
Well, this raises that important question. Where can people find more budget-friendly options without, say, a huge drop in quality of life or job prospects?
Yeah.
Our sources point to some interesting possibilities, particularly in the Midwest.
Okay. Tell us more. Give us some hope.
Well, Detroit, for example, stands out. It's the most affordable of the 50 largest U.S. cities.
Really? Detroit?
Yeah. The average monthly household expenses there are around $600 and $640. That's a significant 23% below the national average.
Wow, 23%. That's a substantial difference.
It really is.
Okay. What else have you found in the U.S.?
Toledo, Ohio is another city worth looking at. Their median home price is around $235,000.
$235K compared to the national median?
It's a full $200,000 lower.
Wow.
And interestingly, even with pretty strong price growth, 17.5% year-over-year homes are still selling quite quickly, about 37 days on market.
So there's demand, but the prices haven't, totally exploded yet.
Exactly. It suggests there's still maybe a chance to get in before prices potentially climb further, A bit of a window, perhaps.
So perhaps a window of opportunity there. You mentioned other Midwest options, too.
Yes, cities like Cleveland and Dayton, also in Ohio, offer significantly lower costs of living.
How much lower?
Household spending in those areas, it's around $1,700 to $1,900 per month. That's like 32 to 41% lower than the national average.
That's huge.
It is. And even El Paso, Texas, while it's further west geographically, it kind of falls into this category of more affordable large cities. So these could be viable options for people willing to explore beyond those, traditional coastal economic centers.
That's an important point, though. It's not just about the dollar figure, is it?
No, absolutely not. It's worth considering that while the cost of living is lower, factors like job markets, other quality of life aspects, they might differ significantly from the big coastal cities. You have to weigh it all.
Definitely. Okay, so the U.S. has these really high-cost anchors, but also some more affordable inland options. Let's head north now to Canada. What's the overall affordability picture looking like there?
Well, the outlook in Canada suggests that while expected interest rate cuts might provide some relief eventually,
Eventually.
yeah, significant improvement is likely still some years away. The fundamental challenge is, borrowing costs might ease, but home prices are still really high.
And purchasing power.
Exactly. Overall purchasing power has been eroded. So it's tough.
So Canadians are feeling a similar kind of squeeze to people in the expensive U.S. cities.
Absolutely. In the spring of 2024, a pretty significant chunk, 45% of Canadians, reported that rising prices were having a major impact on their daily expenses.
Almost half.
And this burden, it's disproportionately hitting families of people with disabilities. It really highlights the social side of this affordability crisis.
Yeah, absolutely. We hear so much about Toronto and Vancouver being incredibly expensive. Have there been any recent shifts, maybe in their rental markets?
Interestingly, yes. We have seen some shifts there.
Yeah.
Caps on international student admissions have actually led to rent decreases.
Oh, really? Decreases?
Yeah, over 8% in Toronto and 10% in Vancouver through the third quarter of 2024.
Okay, that's something.
It is, but, while any decrease is welcome news for renters there, it's important to remember these drops are from a very, very high starting point.
Right, so a small step on a very long journey towards affordability in those markets.
Precisely.
What about national home prices in Canada? Are they still climbing?
The national average home price reached $678,331 in March 2025. That showed a slight increase from February.
Okay.
But yeah, Toronto and Vancouver, they continue to rank among the least affordable markets, not just in Canada, but, globally. Home ownership there remains a huge hurdle for most people.
Okay, so it's echoing the U.S. situation then. Major Canadian cities are tough on the wallet. Where might Canadians find more affordable housing options?
The Canadian prairies present some pretty compelling alternatives.
Okay, like where?
Regina, Saskatchewan, for instance. It's highlighted as having a very favorable rental market, plus low property taxes and an overall cost of living that's about 8% below the national average.
And home prices?
The average home price there is around $411,600.
$411.
$411K.
Okay, Regina sounds like a solid option. What about other cities on the prairies?
Winnipeg, Manitoba is another attractive choice. Their median home price is even lower, around $382,200.
Lower again.
Yeah, and they also boast living costs that are about 8% below the national average. Plus, Winnipeg is noted for its vibrant arts and cultural scene, so there's a quality of life element too.
Right, so potentially getting more bang for your buck and a good lifestyle.
Potentially, yes.
What about the eastern provinces and affordability there?
The Atlantic provinces also offer more affordable living, generally. Cities like Quebec City, Thunder Bay.
Thunder Bay, isn't that more central?
Geographically, yes, but it often shares affordability characteristics with the East. And Moncton, New Brunswick.
Okay.
All of those have median home prices well under $350,000.
Under $350K, that's quite a difference.
It is. And their overall living expenses are also significantly lower, typically in the range of 10 to 15% below the national average.
It really is a consistent theme, isn't it? Major urban centers are pricey, but more affordable regions definitely exist within the country.
That's the pattern we're seeing.
Okay, now let's cross the Pacific to Australia. What's the cost of living and housing situation like down under?
Australia has experienced a really significant surge in house prices since the pandemic, particularly in regional areas.
Regional areas.
Yeah, property values there have more than doubled in some instances.
Doubled. Wow.
Is dramatic. The national median dwelling price reached a record high, $825,349 in April 2025.
Over 825,000 Aussie dollars. What's driving that?
It seems to be largely fueled by strong immigration and these ongoing shortages in housing supply. Same story, different place.
Supply again. And what about the rental market in Australia? Is it as tough?
Rental affordability is a huge concern there. Nationwide, rent inflation is running at about 5.5%.
Okay.
And alarmingly, fewer than 1% of rental properties are considered affordable for individuals working full-time at the minimum wage.
That's incredibly stark. Fewer than 1%.
It really is. And it's naturally led to increased discussions around needing greater protections for renters.
I can imagine. What about the big capital cities? Sydney, Melbourne?
Yeah.
Still eye-wateringly expensive.
Pretty much. Sydney has a median house price of around $1,118,000.
Over 1.1 million.
Interestingly, unit prices saw a slight decrease in late 2024, but rents have risen sharply. They now eat up over 30% of the median household income there.
Still a huge chunk. And Melbourne?
In Melbourne, house prices have rebounded to around $1,069,000 in the first quarter of 2025. The unit sector, though, has seen some modest declines, likely influenced by tighter lending conditions.
Okay, so even with maybe a tiny bit of softening in the unit market, the overall cost of living in these major Australian cities is still extremely high.
Very high, yes.
What about Brisbane, Perth, and Adelaide? Are they any more affordable?
They are generally less expensive than Sydney and Melbourne, yes, but they've also seen substantial price growth.
How substantial?
Brisbane's median is around $882,000. Perth's is $852,240, and Adelaide sits at $804,000.
Still pretty high numbers.
They are, and all three have seen annual price increases in the range of 8 to 11%.
So still climbing fast.
Yes. What's interesting, though, is looking at gross rental yields. That's the annual return from rent before expenses.
Right.
Darwin and Adelaide actually offer the highest yield, 7.9% in Darwin, 6.1% in Adelaide.
Well, for investors, maybe.
Potentially attractive for investors, yes. But these high yields don't necessarily translate to affordability for the average renter. It highlights a potential kind of misalignment in market incentives.
Right. Good yield doesn't mean cheap rent. So even those more affordable capitals are still a significant investment for many people.
Absolutely.
Are there any truly affordable capital cities or regions left in Australia?
Well, Darwin stands out as the most affordable capital city overall. That median dwelling price is $531,000.
Okay, Darwin.
And it has those appealing unit rental yields we just mentioned, 7.9%.
But there's always a but, isn't there?
Well, it's worth noting that even in Adelaide, which is generally seen as more affordable than Sydney or Melbourne,
Yeah.
the outer suburban areas, what they sometimes call the Adelaide Fringe, have seen the steepest year-over-year price growth, 11.6%.
So even within the more affordable cities, their pockets getting expensive fast.
Exactly. It shows that affordability can be really uneven, even within a single, more affordable capital.
Okay, so stepping back and looking at the US, Canada, and Australia together, we're definitely seeing this recurring theme, right? Major metropolitan areas are becoming increasingly expensive.
Yes, driven by a complex mix of factors.
While these more affordable alternatives do exist in specific regions within each country.
That's the key finding.
So what are the main takeaways when we sort of pull all of this together?
I think the overarching picture is that the post-COVID period has really intensified these existing affordability challenges, especially in the major urban centers across all three countries.
Things like remote work.
Right. Remote work shifts, ongoing supply chain issues hitting construction, rising borrowing costs. They've all played a part.
But the flip side is?
The flip side is that it's also clear that more affordable options do exist. You just have to know where to look. The Midwest in the U.S.
The prairies in Atlantic Canada.
Exactly. And the smaller capitals and some regional centers in Australia, they offer potential relief.
And when we think about the bigger picture, what are some of the potential ways policymakers might try to address these really widespread affordability issues based on what we've looked at?
Well, the sources suggest it really needs a multifaceted approach. You can't just do one thing.
Right.
On the supply side, you need interventions like reforming zoning laws, allowing for more varied housing types, increasing the number of new housing starts, basically tackling that fundamental lack of supply in high-demand areas.
Makes sense. Build more houses.
Essentially. But then you also need to look at the demand side.
Like what?
Policies like rent controls or incentives for first-time home buyers.
Yeah.
Those are discussed as potential ways to give more immediate relief to people struggling right now with housing costs.
So it's about supply and demand interventions.
Finding the right balance between those different strategies seems to be the key challenge.
It's definitely a complex puzzle, isn't it? Lots of interconnected pieces. But understanding these global trends and, identifying where those more affordable options might be, that feels like a really valuable starting point for people.
Absolutely.
This has been a truly insightful deep dive.
I agree. The aim here was really to provide you, the listener, with a clear and hopefully comprehensive overview of these post-COVID cost of living and housing crises, looking at these significant global regions.
Mm,
And importantly, to highlight some areas that might be worth investigating further if you're maybe considering a move, perhaps in search of greater affordability.
right. And that brings us perfectly to our final thought for you today. Considering these global patterns we've discussed and the specific examples we've explored, what do you think are the most significant factors shaping housing affordability in your own community? And maybe more importantly, what potential solutions might be getting overlooked right where you are?